Last week, the market sent us a warning. Job cuts hit the highest level in 22 years. Tech, retail, logistics, all slicing payrolls just as we head into the holidays. Government shutdown, airlines slicing flights. At the same time, the Fed is whispering about not being on the same page. Two different Fed people came out saying two different things. One wants to honor interest rates. The other wants to honor the workforce. And we'll talk about that. Man, our president is building a ballroom. The question isn't if something is going to break. I guess the real question right now is what breaks first?
Whoop-de-doo.
And this week, well, I think Wall Street stopped pretending. I think we really got a glimpse of some things this week because you got to think about it. Ginseng Wan, the leader of the AI race, the John Cena of AI, came out and said, well, I think China's going to beat us in the AI race. And then he backpedaled. But the one thing about Wall Street is once you say something, it's said. And I think that shook traders. Not only that, it started with big tech. You had companies like Amazon fall off a cliff. Facebook, a $15.9 billion one-time tax fee. 17% since earnings. Well, Apple did a little something. Microsoft fell off a cliff. Google went through the roof. It was pretty good. I said it last week. I said, hey, we need big tech to stand up for us. And they didn't. And we got to think about something. I'm seeing something this week that was last week that was heavy. I saw a lot of great companies beat earnings and the market just sold off. That let me know they was holding on to that bad news. And I don't like when they do that. I don't like when they hold on to bad news like that. But you got to think about it. The most traveled holiday in America is the day after Thanksgiving. And right now, it looks like we're in a cluster. Beep. I just want us to pay attention. And this week on this call, what I want to do today is I want to take us through the weekly chart. I want to take us through the daily chart. And I want to take us through the hourly chart so we can see exactly what's going on. But I also want to pay attention to the things that's going on. I want to break you through and show you through the jobs claim that really, really, really sent the market downward. So before we get into this, man, I want you to like, I want you to subscribe, and I want you to share this, man, because I promise this video here going to be one of the ones where we going to not just give clarity, but this is one of the ones where we going to walk you through step by step. And I don't do this often, but I think I need to start doing this going into the week. I'm going to give you some things to look at, some things you need to be paying attention to, because my goal is to help you navigate this, because this isn't just random. The layoffs, well, they were centered around tech for sure. Companies are trimming the fat after years of overhiring and chasing growth. Here's the darkest part. It's the time they cutting it. And it's why they cutting it. And the reason why they cutting it is because AI is here, y'all. That's right. Automation ain't coming. It's here. And they making room for it. And well, ain't no turning back now. Let's get into it, y'all. All right, y'all. Now, before we get into this, I want to walk us through this chart right here. So what we're going to do is we're going to look at this hourly chart. I'm going to break this down in a way that I think that all of us can understand. First and foremost, what we see is, I mark something out right quick. So you see me have this little purple line. Well, that becomes a support area that we really need to get back to, that we really need to stay above. We really need to stay above that. So first is primarily what we see is, we see on this red candle right here, what we see is, we see that the sellers, watch this, have taken out the low of last week. So I'm looking at the SPY on the weekly chart because we want to look at a holistic view before we zero down. So what we basically see is, we see the sellers, which is this red candle, it start here. So a red candle always start at the top and go to the bottom. So this makes up the whole week of last week. This is the whole week from last week. So you have what's called a solid body red candle with a lower wick. Now, that lower wick tells us, this right here, tells us that at the low, what happened was buyers stepped in, right? Buyers stepped in and rejected the low. Now, also what we got to put these two candles into reference. So you have this, it's a doji candle, but it's almost like an inverted hammer almost, right? What that tells us is, once it got to the all-time high, let's mark that off, right? And we'll put ATH right there. What that tells us is, once it got to all-time highs, what happens is some sellers then trapped those buyers in. What it mean by trapped is, you had some people that came in late. Once it got to all-time, once it kept pushing up, some people got in late trying to chase that rally. And then the sellers absorbed it, mean they put a lot of selling pressure in. And so last week actually ended up being a neutral week, but the bears came out on top. Well, what happened was it opened higher than last week's open. That's this open right here. That's what you see at 648. But then it pushed past that. So once it pushed past this, I'm about to just put a mark right here. Right? That's what, once it pushed past the low of last week, that tells us that buyers are 1000% applying pressure. So the next thing we want to talk about is not only did they push past it, then they started pushing down into this right here, which was the top of this candle, where it was like a bearish support almost, right? Well, it pushed past that as well. And it came all the way down to 661. Now, what happened at 661 was buyers stepped in. Now, let's just talk about a couple things right here before we go a little bit further, right? There's some things that I really want us to understand and see. So now, because we're looking at the weekly chart, this is giving us an overall trend, right? This is an overall trend, macro trend, big picture trend right here. Now, here's what I want you to look at. I want you to look at it. We go from here. I want to draw this trend line for you. I know y'all like them. So what this showing us is that overall, we still are in the uptrend. We are in that trend. We see that channel, right? We see that channel, so we still inside of that channel. Now, here's what we notice, something that's real interesting inside of that channel. Notice how 661 actually comes to the bottom of that channel and then goes back up. That's essential for us to see. It's important for us to see that. So we inside of that channel. Now, that's good. I don't have a problem with that. I like what I see right there. Now, if we get back into this first candle, it tells us that even though the sellers pushed it down, some buyers did step up. And because they stepped up, that meant a lot, right? So they stepped up and didn't want to get taken out. Now, before we go a little further, I would like to do something here, right? So I would like to, let me just take these off right here because I want to show you something. Now, if we did take our Fibonacci, y'all know I like to use that. We come from this low right here and go to that high. Right, so all my people that love the Fib, we still on top of this 382. That still is technically bullish control, right? But that's, again, I'm still saying that's on the weekly, so that's the higher time frame. So now if you break that, then you're in a different type of trend, but you're still above the 382, so you're still in a higher time frame. You still got the upward trend going, so that's still good. So the upward trend is still in place right here. What we talked about, that upward trend, right? That's still in place. So basically, like if I'm looking at this and I'm watching just the higher time frame. Now remember, we're gonna go through multiple time frames. If we look at the higher time frame, it tells us that the bullish channel still remains intact. The structure still, meaning that overall thing, the structure still remains intact. Now, it has printed higher highs and higher lows, with the channel still going up. Now, the current weekly candles tell us that sellers did dominate that last week, without a doubt, right? In the body, well, it failed to secure a structural break, though. So it didn't break the actual structure, right? Now, price did sweep that low, right? Meaning it took some orders from this low, again, right at that trend line. It took those orders from that low at 661. And it did what's called sell side liquidity. But then buyers did absorb that pressure and they pushed everything back up. Now that's just on the weekly time frame. But what I want to do is I want to go a little bit further. So again, I'll say it again so people understand what it is that's going on. Just in this weekly format. In this weekly format with this candle right here, this first red candle, you see that the sellers took control. They took out the low of the week before that, which was 679. Now, as soon as you take that low out, you know for a fact, anytime a candle takes out the low of the previous week, then whatever way that sellers going to really push that down, because that becomes another type of liquidity zone. If you break that, because people are saying, yo, you're not going to break this, you're not going to break this. So people normally have stops right there. Plus you have some trapped buyers from the all-time high. So because you have some trapped buyers in this inverted hammer right here, now the pressure was on them. So now once you broke that previous week's low, once you broke that, they sold out. They were like, nope, I'm gone. So what that did was that fueled more of the downside pressure. So then what happened was once you got to 661, which was here, which was right on top of your trend line, your channel, what happens once you got there, the buyer said, enough is enough. Y'all, I can't let y'all go that much further. Right now, no, I want you to see something. If we take that same line and push it all the way out at 661, notice something. It's almost right on top of that line, right? So still in that same kind of area is, right? And I like to look at stuff like as zones more than anything, right? Still in that same zone. So that's kind of like what you call confluence, right? Still in that area, still sitting right there on it, 660-ish, right? It's still right there, which lets us know this was an area of interest for the buyers to say, nah, bro, we got to defend this, else they're going to know how to act. Well, let's go a little further, y'all. Let's go into the daily, and what we'll do is we'll take this off. Now, with the daily, we want to get a little bit more data, right? So with the daily, we want to get a little bit more data. So now what we're going to do with the daily is we're going to add a couple more indicators that just help us out right quick. So we're going to add our 20-day, because this tells us about short-term momentum. Boom, as you can see, the current candle, which is that green candle, is under that. Then we're going to add our 50-day. And then we're going to add one more to the chart. Just because we've been in this downtrend, it's important to know that where this one at. Now, the reason why we want to know we want to add this 200-day, because if it has lost the 200-day, then we really in trouble, right? But because it didn't lose the 200, we got a fighting chance. So first things we do here, once we do this, we're going to go right here back to this, and we're going to mark this out right there. We're going to go previous week high. We're going to mark this out. Boom. We're going to mark this PWH. Boom. And then we're going to come right here and go previous week low. Why? Because that becomes liquidity zone. And we going into this new week. That's why I'm doing that. And I want to set the tone for us as we go into this week. And then we're going to mark this up here. We're going to do something different. We're going to go here. We're going to change that from purple to black. We're going to change this to red. And we're going to write all-time high. That way we're not confused. So now when we come into the daily, we got our previous week high set up. We got our previous week low set up. We got our all-time high set up. Now that's good. Now, as we get into that, I want to say something to us that's really, really important. We talked about the trap buys when we hit all-time high and it came down. Now let's dig deeper into this. Now, as we look at this, some things I want us to notice, some things that are essential for us as traders to navigate. Now, I got to mark this out because this is going to be important. And we'll write right here, we'll put Trump sell off, TSO. This was where we were at when Trump sold off, right? This is where we was at a couple Fridays ago when Trump had the bright idea, when he got mad at China and the market just sold all the way off. Now, we noticed is we took all that week to get up. And I remember saying something last week, if we get over this certain price, which was 673, I said, y'all, we get back over 673, we gonna get some action. So it took us 2 weeks. We got over 673. We hit that all-time high. We got over 673 with this one right here. We hit all-time high. And then what happened? Boom. We sold off. Now, this is essential for us. Why is this essential for us? Because now if we look at 661 was where buyers stepped up and said, previous week's low, which was last week low, buyers stepped up and said, nah, bro, we can't go back down into that. So I want you to know something. This week, there's going to have some stop orders right underneath 661. That becomes the structural base that buyers have to defend this week. 661 is what buyers have to defend this week. Now, that means if the price come back down to 661, the buy. We don't want that. We don't want that. Now, another thing that we got to pay attention to that I want us to pay really close attention to is that green line. That's our 50-day SMA. So the 20 and the 50 are the two short-term moving averages that we want to stay on top of, because that lets us know that the buyers are in control. And as long as we are under that, it tells us that the bears are in short-term control. So anytime we under the 20 and the 50 SMA, that tells us that the bears are in short-term control. We also have a series of, I'll mark it right here. We have a series, we have a high, then we have a lower high, then we have a lower high, right? Which means we have a lower low, a lower low, right? So we have those. Now, the next thing I want us to pay attention to is this. As we get into this, we notice that we got 661, and I want to say this because this is really, 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 really important. When we got to 661, that lower wick is really a response to demand. It's not really buyer strength. Okay, that's good to say right here. Because we can look at them like, yeah, the buyer stepped up. Well, it's really a spot response to a demand zone saying, hey, y'all pushing us down a little bit too further. Y'all pushing us down a little bit too far. Right? It's not necessarily a demand zone. It's just buyers saying, yo, y'all pushed us down a little bit too far and we don't like that. We don't like y'all pushing us down. So that was defense more than it was offense. For it to be offense, we need to see the buyers get back on top of 673 this week, not just touch it, but we need to see them get back on top of it and close, right? Get back on top of it and close. I want y'all to keep that in y'all mind. But also what that does is if they get back on top of 673 and close, what happens is now you get back on top of what? The 20-day SMA. Now what that will do is now you'll have short sellers trapped. Okay? Okay, we talking money talk right here. You'll have short sellers trapped. So what happens is on a 1 week candle, we talked about the buy side liquidity above the highs, which means smart money distributed inventory, sold back into the market, right? And then they had a rejection. Now we are in this second week. Now we getting into this candle right here. Is this where activity got real heavy at, right? We can also use this liquidity on this PWL. Watch what I'm about to say to y'all. The lower wick could also be, listen to what I'm about to tell y'all, sellers taking some profit from what they got from because buyers take profit and sellers take profit. This can be sellers taking profit. Watch this. Or early buyers attempting to defend, but they didn't regain control. Okay, let's talk through that. That's important. And it's all on this one. I'm on that last candle. I'm on this green candle right here. Let's just talk about this one candle because this is going to be so good. So you know that the green candle opens right here. Let me just mark this right here. If the candle turned green, that means it opened right there. It opened at the bottom. Well, in order for that candle to be green at the top with no wick, now notice the no wick at the top is important. The no wick at the top says there was no rejection up there. So here's what happens. It opened at 667 and the bears just pushed it down. Now, they pushed us past the 50. That was key. That was essential. They pushed us past the 50-day. That immediately woke the buyers up. So when they pushed it past the 50-day, it got down to 661. Once it got to 661, I want you to understand a couple things could happen here. And that is either the sellers who were been selling since the previous week's high, either they were selling, trapped buyers were getting out, saying, you know what, there's too much pressure for me, right? Or you had some early buyers getting in at 661 and getting in. Or it could be institutions reloading shorts to start more of a downturn. Trap, what do you mean? Well, what happens is institutions, they'll start covering, selling their shorts, taking profits on those shorts. That's how we get the higher highs and lower lows. Somebody got to take profits. They taking profits so they can reload and push us back down. So let's go a little further right here because I think this is key just on this daily. Let's just see what our Fibonacci tells us if we go from swing low to swing high and see what happens here. Now, notice two things. So the first thing I'm going to point out to you is this. And I want you to just see this. So on the Fibonacci, Our 50% mark tells us the line in the sand, right? It tells us that if you get above this, somebody is in control. And if you stay below this, somebody else is in control. So if you stay below the 0.5, that tells us that the sellers are in control, right? Even if it's in a short term. But if you get above that, that tells us the buyers are in control. Now, look how close where Friday ended right at the 0.5. Right. Now, there's not a big wick there. It's a tiny, tiny, tiny wick. But notice it stopped right beneath the 0.5. Let's open that up a little bit so my people can see it. Right. It stopped right beneath that. Right. Things in this market don't happen as a coincidence. Also notice we have our 786 marked, which is in the orange, which is at the bottom. Right. Notice, I'm going to say something. If you go from swing low to swing high, the 786 is the deepest discount you can buy on the fib. If it breaks the 786, you've lost it. Right? That's the deepest discount you can buy on the fib. That if it goes past the 786, it's on the other side. So just notice how those things line up. We got right at the 786 and then buyer stepped in. So I'm showing you this because I don't want you to think that nothing happens in this market for like coincidental. It's a numbers game, right? So it got to 786, buyer stepped in. Interesting. That worked right on the fib. And then it got right to the 0.5, halfway, which is called the equilibrium, our line in the sand, and it stopped. So is that seller saying, that's first, I'm gonna let y'all go? Or is it buyer saying, yo, we gonna go back up, we just ran out of time? Either way the cut go, this is truly, truly, truly interesting for us. So now the one thing I will say that is in the buyer's favor, we did not take that 200 out. Now, let me say one more thing to y'all before I go any further. Coordinates, 620. 620, 72 is 10% from all-time high. So if you want to know what a 10% drawback looks like, 620, 72 will give us 10% from our all-time high. So if the S&P 500 gets to 620, 72, that's a drawback. Yeah, that is 10% from our all-time high. So I like to keep things in perspective. So here's another one for you, just to help you out a little bit. 655. And if we had a 5% correction from 52-week high, if we had a 5% correction from 52-week high, it would be 655.22. So I want you to keep those two numbers wrote down. 655.22 is a 5% correction, right? And 620.72 is a 10% correction. Those are 5 and 10% pullback. So even as brutal as this week looked, it wasn't even 5%. Now, of course, individual stocks get hit differently, but it wasn't even 5%, let alone 10%. Now, I'm not saying that it can't happen, but the floor that we do need to keep, the thing that we do need to keep is right at our 1% on our thing, because that would be the bottom of the Donald Trump sell-off. All right, let's talk about these numbers for a second. The uptrend on the chart, 100% met distribution. Sellers, well, they confirmed control. And the buyers, well, they only managed a defensive reaction, but not a full reversal. Well, that's pretty cool. Because if the buyers on the weekly remain in control for the long-term trend, but the sellers have successfully defended the all-time high. However, you have what's called a misalignment in time frames, right? And so what I want you to understand that is the short-term structure sequence of lower highs and lower lows confirm the short-term selling pressure, but not a full-term reversal. Now, the moving averages, the 50-day moving average, we reclaim that on a daily. The SMA, well, That's the pivot point. And that 200 is really deep structural support, and we don't want to get there. So I want to keep that in mind as we get into the next part of this. This is kind of long, but I just want to paint a picture of what's going on and what we need to look out for this week. And on the daily, the momentum still is correctively bullish. But buyers are attempting to regain control because they did reclaim that 50. But sellers, well, they strong right now. And I ain't gonna lie, I'm just being realistic. Much as bullish I am, they do have some favor right now. And so this week is gonna be vital. The weekly structure still favors the buyer, but the tape shows that the traps buyers, well, they in trouble. And the defensive play is at 661. It's going to be critical. If it holds and we can go back up, that's good. We need to reclaim 673, and then we need to go back to 680. If it fails, well, more puts. It's going to be a lot of trap buyers. I want us to get into some data that's important for us this week. I'm into this video this week because I know this week is pivotal. This week is pivotal if you're a buyer. This week is pivotal because we have a lot going on under the surface. This week is pivotal because we need to see what's going to break first. It's pivotal because I know a lot of times we be buying a dip, and we may have some dip to buy. So I don't want you to run out of chip. And the reason why I keep repeating certain things on the chart is because, one, I want you to log certain things in your head. So when I say stuff like trapped buyers, when I say something like sellers may be taking profit, when I say stuff like breaking previous week's high, previous week's low gave us more selling pressure, when I say stuff like using liquidity, I want you to be able to take those terminologies and I want you to be able to hold on to those. I want you to be able to put that in your brain. That's why I kind of walk through the chart slow. That's why I kind of walk through it, repeating myself, because a lot of times people just be saying something, they be going over people's head and you don't really know what's going on. You're like, bro, I don't even know what the hell that is. So for me, it's about saying it a couple of times so you can oh, I get it. And when you go back, you can be like, oh, I saw that candle, broke that low of that candle on the weekly. Oh, so once they broke that, oh, that's what that is on a weekly. Oh, I saw he went from the weekly to the daily. Yes, because the weekly give us a macro look. So the weekly trend is still in place, but we got to see what's going on with that. So the weekly trend is still in place. Well, did it break through that? Well, it didn't break that channel. So, it saved us, right? And then we go to the daily and we see a few more, like, oh, Trap, explain that to me. Well, we had leverage right here. And so we'll get into the 1 hour a little bit later. But I want y'all to know why we saying stuff like this, right? We talked about something earlier. We talked about jobs. And I want to show you the report that came out, right? And this was pivotal because, mind you, remember Jerome Powell said something last week. What did he say, y'all? He said, hey, we don't have a lot of data. We just don't have a lot of data. And so it's like driving a car in the fog. And I want you to see something right here. And I want us to read this together, right, as a squad. And it says that the U.S.-based employers announced 153,000 jobs cut in October, right? Up from 175% from 55,000 cuts in 2024 October. It's up 183% from the 54,000 cut last month. According to the report released Thursday from global outplacement and executive coaching firm Challenger, Gray, and Christmas, October's pace of cutting jobs was much higher. Listen to that keyword. It was much higher than the average for the month. Some industries are correcting after hiring boom in the pandemic, but this comes as AI adoption, softening consumer and corporate spending. The rising costs drive belt tightening and hiring freezes. Now I won't stop right there. We talked for a minute where we talked about jobs are 100% going away. And as much as these CEOs, as much as they want to say, yeah, the jobs ain't going nowhere. Yeah, the jobs ain't going nowhere. Yeah, new jobs coming. I'm here to tell you that once these jobs leave, they're not coming back. And let's go a little further to see what they said. Through October, employees have announced 1 million job cuts. That's this year. 1,599,500 job cuts. An increase of 65% from 664,000 announced in the first 10 months of last year. It's up 44% from the 769 cuts announced in all 2024. Year-to-date, job cuts are at the highest level since 2020, when 2.3 million cuts were announced through October. I just want to understand where we at and what's going on. But let's go a little deeper right here, because this is where it gets real interesting. The very technology that Wall Street celebrates is quietly sneezing in our face. It's taking jobs, it's suffocating people. NVIDIA's owner, Jensen Huang, my guy, Black Jacket Jensen, said China could win the AI race. That's sending ripple effects through the market. Think about that. The company fueling the AI boom is admitting that someone else controls the future supply chain. So you're talking about if they win AI and they got the rare earths, everything is setting up for China. Man, Q Ray Dalio, man.
What they do?
Q Ray Dalio. The same innovation that created trillion-dollar companies is now creating fear. I just want you to let that sink in. And that fear is driving vitality right before the holidays, right as we end the year. Now, the Fed has what's called a dual mandate. And I've talked about this before. Growth versus stability. Now, let's connect it. The Fed has two jobs: keep prices stable and employment strong. That's called dual mandate. Inflation is cool, but unemployment is, well, starting to tick higher. Historically, that's when the Fed pivots. Rate cuts, well, they come next. Well, what's happening now is we in a situation. Because what I want us to do is look a little deeper about the scene. I want us to see where the jobs getting cut at. What industries are cutting the most in October? Technology is cutting the most, and then the retailers. But then the service sector, which leads companies that provide support for their businesses, such as cleaning, staffing, and outsourcing, well, 1,900 jobs cut in October. Warehousing led all industries in October cut, announcing 47,000 jobs cuts, up from 984 in September. I want you to hear that again. 47,000 job cuts, up from 984 in September. Year to date in the report has cut 90,000 jobs. So we had 47,000 cuts last month. And in the year, 90,000 jobs. I want you to understand something. When Amazon said they have more robots than employees, you're looking at it. Consumer products companies announced 3,400 job cuts in October, up from 1,900 in September. And for the year, they have cut 41,000 jobs, up 21% from 33,000. That means warehousing, consumer products, and services based. Those are the industries that the everyday person works. Those jobs are leaving, and I promise you, they're not coming back. So when you ask them, like, yo, what's causing that? They said, well, the Doge impact, right? That was when Doge was in, cutting a lot of jobs and all that, right? Well, look at this. In October alone, cost cutting was the top reason employers cited for job reductions, responsible for 50,000 layoffs in October alone. Watch this, though. Let's dig a little deeper. Artificial intelligence was the second most cited factor, leading to 31,000 job cuts from companies continuing to restructure and automate. AI has been cited for 48,000 job cuts this year. Market economic conditions, well, that was last, accounted for another 21,000 job cuts in October, bringing the total date for the season, 229,000. While closing of stores, units, and plants resulted in 16,739 cuts for the month and 161,000 for the year. Restructuring was cited for 7,588 October announcements, not jobs, but announcements, for a total of 108,000 so far in 2025. I'm telling you that AI, the very AI that companies are gloating about, the very AI that people are demanding about, the very AI that everyone is so excited about. I promise you, family, this ain't just about ChatGPT. I promise you, family, this ain't just about Sora. I promise you, family, this ain't just about Gemini. I promise you, family, this ain't just about Grunk. I promise you, this is about job kidnapping, abduction. And so this is why, we putting out content about trading and investing. And again, it's not financial advice for nobody, but this is just real deal talk, y'all. Right, so I just want to go a little bit further, if y'all don't mind. Before we get to, I just want to go a little bit further so y'all can see what's going on. Now, I want to show you something. The future now is saying that, yo, we had a 70-something% rate hike for before the jobs thing. Now it's at 68. 68% of that for the December 10 meeting. Well, they want to take that target down. Well, it's right about 4% right now. They want to take it down to about 3.5, 3.75. Right? It ain't moved that much. Now you got to ask yourself. I told you earlier that you're seeing Fed people. You saw Lisa Cook say, hey, I think we should go, towards, rates. And you had another one of the Fed members say, I think we should go focus on job stability. Well, the thing about the dual mandate and where we at right now is the Fed is in a tricky position. Now, I've never had the balanced rates for the country, but here's what I will say. If you cut rates, that's going to bring inflation up. I don't know if that helps jobs or not. And so here's the paradox. Every time the Fed cuts to help, the market hears stimulus and it rallies. That's what happened in 2001. That's what happened in 2008. That's what happened in 2020. And it happened recently. But right before that, the real pain hit. Rate cuts don't mean rescue. They mean recognition that something is breaking. And with all these jobs going, something is breaking. That's why a while back I talked to y'all about a universal base income, UBI. That's silent squeezing airlines. We hear airlines saying, yo, this is the most busiest time of the year. Airlines around the world are saying, yo, we can't do this. Why? Because we have a government shutdown. Government shutdown means what? We can't get correct data. And if we can't get correct data, this is not good. The signaling weaker demand and higher fuel costs, combined with potential government shutdown, Congress wrestles over funding. And you got the making of it, what? A scared economy. Remember, the holidays are where Americans spend the most. It's where we spend the most money. If consumers hesitate, then Q4 earnings will collapse. And Wall Street will finally admit, y'all, growth, it ain't happening. So, what you think about this, man? The reality is, and it's just me, man, just walking us through this, man. The reality is for this, y'all, the market is pricing in fear right now. And there's very few times where the market really is being fearful. Last week sell off, man, it wasn't just about positioning. Traders are preparing for a softer labor market, a Fed pivot, and a global demand all at once. That's why you saw volatility spike, yields fall, and tech really take a breather. But under the surface, there's still rotation. Investors are quietly buying utilities, gold miners, defense, and dividend stocks. And how do we know that? Because if you look at it last week, I got my notes right here. XLE, real estate was up. XLE or XLRE was up, which is real estate. XLE was up, was energy. XLV was up. XLF did pretty good. XLU and crazy as healthcare. XLV is killing it. So that tells us that there are other parts of the market that is doing good. But the thing about that is the market doesn't rally without tech. We know that. I've been saying that for a long time. And when a crowd runs from risk, smart money really just hunts the value. And the more you see people pile into bonds, the more you see those bond yields drop because they're not attractive. So this week, eyes will be on three things. We want to hear confirmation about a rate cut. We need to hear that. We need to hear something about that. We need to try to get some unemployment claims or something. We need some corporate guidance, especially from retail and logistics ahead of the holidays. Thanksgiving is right here. Expect chop. If you're trading short term, keep the risk really tight. Momentum names will overreact both ways. For investors, volatility is the opportunity, but patience pays more than panic. Patience pays more than panic. And before we go, yo, I want to take us to the 1 hour chart for 1 second because we're standing at a crossroads and technology is rewriting jobs. The Fed is preparing for its next move, and traders are trying to front run the pivot. You're trying to get in front of it. This isn't the end of the bull. It's the test that separates the gamblers, from the builders. Because if the market's like this, wealth doesn't vanish. I said it before, it transfers from the emotional to the informed. So let's dig into this 1 hour chart before we go. Now, notice how, let's identify something first and foremost. If we look at our all-time high, what do we see? That's a high. And then we look at our previous week high, that's a what? That's a lower high. Interesting. Now, let's go a little further. I'm gonna help you out a little bit more. Then we have, after that, we have another what? Lower high. And then we have a what? Lower high. So that's interesting. That is signaling that we are 100% in a downtrend on the 1 hour. But I'm gonna bring you to something that's really, really, really important. If you look at that yellow line, that's the 200-day moving average. Now, we noticed on the 1 hour, it's probably also on the 4 hour. Let's just zoom in right quick. Yep, it's on the 4 hour, so you see it down there. Notice that the stock on the weekly, the daily, the 4 hour are all above that yellow line. But on a 1 hour, the stock is below that. That's called multiple time frame dislocation. That means that there's a compression of strength, which just simply means that the strength is breaking down, and everything breaks down on a lower time frame before it breaks down on a higher time frame, which means that, think about it like this. In a 1 hour session, let me do this right quick to show you even more so. I just click to the 15 minute. You see where it's at? Watch this. And then I just click to the 5 minute. It's closer on a 5 minute. That's interesting. It's really, really close on a 5 minute. That's interesting. We like that. But it tells us that things are breaking down on the lower time frames because there's more activity. Think about it like this and from this perspective, right? On the 1 hour, that's 60 minutes of behavior. Whereas on a daily, that's 1,440 minutes of behavior. So on the hourly, you see a breakdown, right? You see strength compressing, right? Like, it's flipping. That means in the short term, the trend is actually flipped already, right? So in the short term, the sellers have taken control. In the short term, how do we know they've taken control? We know they've taken control because we get a series of lower highs. Look, you got all-time high. The previous week's high, that's lower than all-time high. So that's a lower high. And then that green arrow that I drew, that green line that I drew right here at 680, that's another lower high. And then you had another green line that I drew, that's another lower high. Well, what confirms that? Well, what confirms that is you get a lower low. So let's mark that out as well. And I want to just make sure you all can see that. So you have a lower low here, you have a lower low here, you have a lower low here, and you actually have a lower low here. So those all tell us that that the buyers have lost control on the lower time frame. So think about when the water comes up. Water comes up not from the top to take something down, it comes from the bottom. It'll come from the bottom, and it'll take out that first floor, and then it'll take out that second floor. So now the people at the top have time to fix it. So you think about the structure of anything, right? Well, what happens is, and I want to give you a perspective on this, right? So let's say think about this as the market, all right? And so it goes like this. So this is the first floor. So let's say this is the 5 minute, right? And then you have this here. This is the 15 minute. And this here is the 1 hour. And this here is the 4 hour. And this here, let me make that a little smaller. And then this here is the 4 hour. And then this here is the daily. And this here is the weekly. And this here is the monthly. Right? And so what happens is, first thing that happens is, right, so the weakness comes here. takes this out. All right. Well, you still have what? Watch this. You still have structure. All right. And then it comes and takes this out. So this is the 15-minute chart that we saw. All right. And then here we are here. Now we at the 1 hour. Now, the dope part about this whole scenario is the 4 hour, even though, watch this, even though these are taken out, I'm about to show you something. You still have a level of structure in place, right? You still have a level of structure in place. Now, what they can do on the 4 hour is they can secure themselves, meaning they can put the fire out and start to rebuild. They can rebuild from here. They can come here and say, all right, how do we get this thing back? Right? So they can build on this 4 hour. And the thing about that is, in order to build it, what happens is if the buyers then take control on a certain level, then they can say, hey, let's go build it here. Let's go back to the bottom and put this fire out and build it here, because then you'll see the change start taking place here first. The change won't take place on the 1 hour first. Let's go to this 5-minute chart and start building something out. Let's try to flip it let's put the fire out at the 5-minute. And then you'll see it to start to show up at the 15-minute. Right? And then you'll see it start to show up at the 1 hour. Right? Now, the key thing about that is before this daily gets on fire, right? Before that whole trend starts to change, all of these have to be taken out. That's the dope part about the market. So you can look at the cracks here and here. This is more behavior. But once the cracks start reaching the 1 hour in the 4 hour, once it start reaching the 4 hour in the daily and then the week, that's why we looked at the weekly, it's still intact. We looked at the daily, it's still intact, but it's threatening. If we go to the 4 hour, we'll see the same thing. So I hope that really made sense to us as we get back. I hope that really made sense to us, because that's how you look at the market. As an overall, you look at it from that perspective. So let's get back to our chart right quick so we can see what's really happening. Right. And so what I want to show you is it's underneath current price where you see previous day's high at. Notice that it stopped right there. It didn't reclaim that. Right. That green. Right now, we have this rally at the bottom of the market. We have this rally on the next side of the market. And one of the things we did in the Patreon was we played this downside and then we switched over and played this upside right here. So this right here, we got a part of that. So you see that upside build up. Now that can really truly just be, if we being honest with you, that can truly just be sellers taking profit. But I want you to notice something that's real interesting right here. Right? That's why I came to this one last. Right? Notice that there's a gap, a small gap. I'm going to show you something. We'll open this up so you can see it. There's a very small gap right here. And it got filled. Now, the thing about it was, if you notice, the gap got filled, right? Watch this. The gap got filled. Sellers rejected it. They absorbed it, but buyers pushed through it. Toward the end of the day, buyers pushed through it, but buyers couldn't get on top of that. So this week, we need buyers to get on top of that previous day's high. We need them to get back on top of that previous day's high, which is 670. And the ultimate goal, the real goal, the big goal is to get back on top of this Trump tweet, which is, so they need to reclaim. So let's take these off. So if you're looking at that, one of the things you really need them to reclaim, if I'm being honest with you, is 673. Why 673 trap? Because that's where the Trump tweet was, right? And that was a previous all-time high, right? That was a previous all-time high that became resistance at some point. They had to break through it, and now it became support. So we need to get back on top of that and turn that into some type of support. Now I want to bring you to something else that's real interesting if we look really, really close, right? So I marked something out here. I want you to see something that was interesting. Right here, you have like this This is interesting right here. I noticed this when I was looking at it. You have this quadruple kind of supportish. That's going to be a key blind because notice that's right by the 663. So if you get on, you're going to need to get on top of that. You're going to need to get on top of that 674. That's going to be essential. So going up, you at 670. The buyers need to get on top of 674, 100%. But let's erase some of that off the screen. So I want us to get on top of that. I want us to really get on top of that. So this week we looking for buyers to get right back on top. So the current price is 670. That's what we laid off at. So we need to get back on top of one. We need to reclaim 672. And the reason why we need to claim 672 is because we need to get back on top of that 200-day moving average. Right? That's important. And we don't just need to get on top. We need to close on top of it. So we need to see a close on top of that 200-day moving average. And we need to go from there to about 674 with a close on top of that. We get on top of those, that'll put us back on top of our 50-day moving average. That'll put us back on top of our 200-day moving average. And that is where that'll put on top of our 20-day moving average. And that'll put us on top of our 200-day moving average. And that is important for us as buyers, as longs. We need to get on top of those for sure, without the shadow of a doubt. And you never like the fact that your 20-day has crossed your 50-day. You don't like that. We want to see a 50 above that. So that's another thing we want to look for. We want to see our 20-day above our 50-day moving average, but that takes time. But that's what we want to see, y'all. In order for us to go back to all-time highs, we need to see that. And remember, so a couple of things you need to be looking for this week. We need to be looking for some type of idea about the government reopening. That needs to happen. They saying something about December 1st, but that needs to happen. We saw Trump put out a tweet said, yo, Democrats need to stay in, Republicans need to stay in. Republicans shot something down. He was like, yo, we need to get on top of that. So I salute him for saying that. Secondly, we need to get those open, but we need to hear some type of catalyst from the Fed. All that whispering needs to go. And we need to see tech pick up. Right? That's what you're looking for this week. You need some type of catalyst about the government opening this week. You need some type of catalyst about SNAP benefits. You need something to push the market right now. Other than that, that's what's going to happen. So listen, I want you to understand it's a lot going on this week, y'all. It's a lot going on this week, and we're going to see a lot of people affected. I think for me, more than anything, is just seeing people get affected and seeing people go through this and deal with this. And I know you're looking like, man, Tribe, I ain't really, doing all that. I just want you to know that. And if you in those positions, if you in the short positions, I want you to read your charts. If you're in your long positions, I don't want you to be greedy. Right? But this is what we have going on this week. And this is important for investors and traders. This is a pivotal week for the market. So hopefully, I know this was a long video. Like, subscribe. I'm here for you. It's Sunday. Y'all trap safely this week, man. Salute.